All right. Today SPY was up 0.63% and SPY is now above all of our moving averages except one more, and that is this negatively sloping 20 daily moving average, which is going to be a critical resistance that SPY does need to break above. So going into tomorrow, if we do get a gap up open and we can clear that resistance, we pretty much have a straight shot up towards 448 to 450, and then above that, the gap to that 455. So it's a pretty easy trading week because we're sitting right here near the critical resistance very early in the week, and we're either going to break through it or we're going to get rejected. And if we get rejected, we need to lose this support right around 441. Below 441, we're back below all the moving averages and we're continuing into the bear trend, which is going to take us down towards 430. Now, if you did not watch the weekend analysis of the weekly charts, you might want to go do that right now because the weekly charts are more powerful than the daily charts and the weekly charts are at very critical support. And I never suggest getting bearish at critical support. It's much simpler to wait for price action to break below it and then get bearish. So going into this week, I'm pretty bullish, which means I won't be surprised if this resistance breaks. But if you want to wait and confirm the resistance break, that is completely fine. Just keep in mind when you wait for a break of resistance, instead of going long from critical support, you don't have the great risk reward setups, and you really want to get in the habit of buying at support in a bull trend because that is where your risk is well defined. You can be a breakout trader and you can buy breaks of resistance, but that's usually where the bull traps occur, and that's usually where you're not going to get the best risk reward setups. But everybody has a different trading style, and it's completely fine to be a breakout trader as long as you know how it works and you know how to stay profitable doing it. So SPY has the early test of resistance tomorrow morning, and we're either going to break it or reject it, and you know the critical support is down there at 441. On the NASDAQ 100 triple Qs, we were up 0.75% today, and just like SPY, the price action is above all of the moving averages except that negatively sloping 20 daily moving average of resistance right around 367. If we gap above that resistance, that's going to be bullish, and it means we're likely going to push higher towards 375 towards the gap fill at 380. Critical support tomorrow will be right there at 365, and if we don't break support and we break resistance, it is very likely that we're going to head higher towards that gap fill above 380. So pay attention to that level at 365 and pay attention to that negatively sloping 20 daily moving average because that is going to guide you this week on which direction you should be trading in. In the Dow Jones, we were up 0.64% today, and you could see my projection was that we would go lower towards that gap fill. However, the gap did not fill, and we're already starting to bounce. So right here on the Dow, it is possible we will reject from this critical resistance at 346. And if we do reject from here, then it's possible we come down towards the gap fill. But keep in mind, there's no guarantee that gap has to fill now, so it is possible we continue higher. And if we do continue higher, you're going to get confirmation in the price with that break above critical resistance at 346. Above 346, we have that negatively sloping 20 daily moving average right around 348 and resistance right around 350 to 351. On the Russell 2000 IWM ETF, we were up 0.89% today, continuing that bounce off the 200 daily moving average. And intraday, we did break last week's high, which is obviously a bull breakout. But on the daily close, we are struggling to close above 186. So there will be a resistance between 186 and 188, but if we clear through that resistance, we're likely going to start trending higher towards 195. Critical support remains 183, and if we break 183, we're likely going down towards that gap fill at 176. On the ARKK ETF, we are up 0.27% today, and ARKK is still relatively bullish above a rising 200 daily moving average down there right around 39.5. But if at any point we break that support, I'm looking for impulsive selling down towards the gap fill at 36. But with these Bollinger Bands squeezing, it's looking less and less likely that ARKK is going lower, which means there's a good chance we're going to see an attempt by the bulls to break out above 42 to 43. But that is critical resistance, and all of these moving averages are crossing over towards the bear trend direction. So if at any point we lose critical support, it will be impulsive selling to the downside. On the VIX, we were down 3.77% today as the VIX is trending back down towards that support between 14 and 15. And this is where the bulls need to see the VIX crushing to confirm the bull trend, and we're going back to higher prices. As you can see, the VIX is losing a lot of bullish momentum as these moving averages cross over, and the VIX is now below all of the moving averages with the price action, so it's completely possible that we get our bullish scenario. On Bitcoin, we're currently down about 0.4%, and Bitcoin is still bear flagging above the support at 25,000 and below the resistance at 27,000. There's a lot of bearish crossing over with the moving averages, so just be cautious, and the next critical support is 25,000. On Tesla stock, we were up 0.1% today, and Tesla is finding resistance right there at that 50 EMA, which is that resistance at 243. If Tesla starts breaking that resistance, it's going to be a very quick trip to 255. And if Tesla breaks 255, we'll start trending higher towards the 270s. So as you likely know, if you like trading Tesla, it does move very quickly. So if at any point tomorrow we start breaking the 240s, that is going to be bullish price action, which means you should be getting on that bull towards the target at 255. The critical support in Tesla, in my opinion, will be right around 236 to 238. And if we break that, there's a very good chance we are going down towards the gap fill below 218. On Apple stock, we were up 0.88% today, and Apple is sitting right here at this negatively sloping 20 daily moving average of resistance at 180, but I consider the critical resistance 182. If at any point Apple breaks resistance at 182, this bearish projection is incorrect and we're going straight towards the gap fill at 190. However, it is possible if we get rejected between 180 and 182, it is still possible Apple is trying to go fill that gap at 167. So we'll respect the crossover for now of the 20 moving average below the 50, but as soon as we break 182, we're instantly getting more bullish on Apple stock. So jumping back over to the S&P 500, this is without a doubt a very strong start to the week. However, there is one more critical resistance the bulls need to break, and if the bulls do that, it is very likely going to be a very bullish week. So there's very well-defined risk levels very early in the week at both resistance and support. And this is the time you want to place those low-risk trades because you want to capitalize on opportunities in the market. And the market is giving a great opportunity to either short from resistance or go long at support, which is why I encourage you to watch that weekly technical analysis video, because if you haven't seen the weekly charts or you haven't seen the technical analysis on them, I do think that's going to help you out a lot here. If you want to crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.